Hello guys, welcome to my video. So a few days ago I shared a post. I'm using my phone to record so I cannot show it to you. But anyways, so a few days ago I shared a post asking whether you guys would like to see my portfolio allocation. And honestly, I was quite surprised at the responses that I got because I did not realize that there were so many people who'd be interested, right? So what I realized was that there isn't a lot of reliable information about the investment landscape here in Bangladesh, especially in for our context, because there are like legalities involved. There is like some cultural stuff that we need to like account for as well. So for that reason, I'm here to share my experience and my journey with you. For those of you who don't know me, my name is Saif Kabeer and I have a small marketing agency called GM Studios. We have worked with like a lot of people you may recognize, but mostly our clients are international. Apart from that, I'm also working on a new project called Prosper Academy. More details on this later. Anyways, this video will be divided into two parts. One is my portfolio allocation and a little bit of reasons why, right? And another would be an idea on how to start investing from zero. I think a lot of us, like if I I started pretty recently, right? So if I had someone tell me all of this information that I have listed over here when I first started out, it would have been amazing. Anyways, so let's get started. But before we start, the mandatory disclaimer, I'm not a financial advisor. I don't have licenses or certificates. Please consult a professional. This is just my journal. This is what we're looking at. So I divide my portfolio into like four buckets and we're going to go from the smallest allocation to the largest, right? So first, the smallest chunk, it's 5%. It's commodities. So what are commodities, right? Commodities are basically goods or raw materials that are used to produce other products or services. So it could be like metals, it could be fuel, agricultural products, etc. In my case, it is precious metals, so gold and a little bit of silver. Um, Also, as I mentioned, agricultural products as well. I also invest on farmlands. Like there are apps where you can basically invest into farmlands where you can basically get a share of returns from their profit. I'll tell you guys about this on a later video. Anyways, to keep it simple, basically we have like gold and a little bit of silver, as I mentioned. So gold and silver white. So firstly, we know these are like precious metals. These are expensive. And if you look at the returns, it had a phenomenal run in the last few years. Right. So in the last year alone, gold had almost doubled in value with a 75.9% increase. Right. 75.9%. That is. So let think about it like this. If we had invested 10,000 taka exactly 1 year ago, our 10,000 taka would has turned into 17.590. That's almost 8,000 taka profit just for holding a piece of metal, right? What if we had done the same with silver? So if we had done the same with silver, so 10,000 during like February 15th last year, 2025, we would have had 26,130 taka. That's more than double the money. It's like around 16,000 profit. So silver gave like around 161.3% increased return There is a funny story. I actually posted on my university forum, the Facebook groups. So I posted there that so I'm like working for like I've been working for quite a while, but I had no investments. It was during last year, January, February, right? So a lot of people suggested me to like invest in silver. And if I had, I would have been really happy, right? Also, like one of my friends wanted to start a silver jewelry brand around last year also, but he mentioned that he will start. So I asked him like last week or last month if he had like started. He mentioned that he had not. So yeah, so the cost of inaction, right? Like if he had just bought the silver at the very least, he'd been really rich. Yeah, you could ask me like why 5%, why not more? At a कम क्यों भाई? Honestly said. But to put it into context, I've only started investing recently, and like the rally had already happened. So gold and silver prices are like overvalued right now. So I don't think it is a good idea to get in on this price. 5% because I will miss the rally. But I still want exposure to the precious metals. I think this will probably always go up in value because basic supply and demand, basic economics, right? So I am DCAing in. So next we have cash and liquid assets. Right. So this is for my emergency fund. And emergency fund should ideally be from 3 to 6 months of expenses. So basically necessary is not money for going out or anything like that. Basically money for groceries, rent, etc. If those are your expenses. This takes care of unexpected events. So if you don't have a buffer, it causes problems. Investing capitalizes time on market by default. So if you have an emergency where you have to take the money out, it defeats the purpose. So let me give you an example. So let's say you do tuitions, right? You teach students, and all of a sudden, let's say you lose one of your tuition jobs. Now you go to your parents and you tell them that your mom, your dad, I did not get paid this month. I need you to cover for my university fees, or let's say rent or whatever, right? But your parents tell you that, sorry, I cannot help you this month. I can help you from next month. So what do you do? Do you take loans? No, never do that. If you take out the money in this context, it stops compounding for you. You don't want that. So we keep this buffer so that when there are unexpected events, we use those emergency funds to take care of those so that our investments remain untouched. I personally do not invest any money that I think that I will need in 10 years because it is a very long-term gain. And let's say for medical emergencies, if you want emergency fund for that, the emergency fund should need to be like really big. So I think health insurance is a better idea, but I'm not sure how to navigate the health insurance, like insurance landscape in general in Bangladesh. But I am constantly studying about it, and when I know enough, I will let you know. But if you do, please let me know in the comments. I would love to learn from you. Where do I put my emergency fund? I put my emergency fund in like a fixed deposit in my bank. So there I get like around 9% per year return. You should ideally be able to like access your emergency fund instantly. But 24 to 48 hours is fine. This is very important, and there should not be any like penalties for basically taking it out. As for liquid cash, I keep it in my savings account. So apart from the emergency fund, I had like a little bit of cash that I basically deploy when markets would dip. So let's say some stock fell a certain threshold, I will invest into the stock so that I catch the upside, right? So now I mentioned that smalls first, but let's keep this one for now. I'll get back to this later. Let's look at the last one first. So for the last one, also like the largest one is mutual fund and ETFs. So this is the smartest way for 99% of the people to invest. And historically, this is very safe. You have heard of S&P 500. This falls into that junk, right? So that is an ETF. For Bangladesh alternatives, that is mutual funds. So these basically, they do not work in the same way, but the outcome is the same. So it is like you take your money, and instead of putting it into one stock, you basically spread it out into small fractions of lots of other stocks. If one company is underperforming all of these other companies, their gains offset the underperforming one. This is like betting on the market's growth. I don't save. I put my money in S&P 500 or whatever, right? So S&P 500 is an ETF. Mutual funds are basically the same. They work in the same way. This is great for saving your money and investing long term. To see a return on this, you need to think at least 20 to 30 year horizon. So you need time to let it grow. It is a continuous process, and I invest a certain part of my income always into this. So let's say I get 100, I usually put like 40, 50 into this immediately. I save like 50% of my income, which is not ideal. I'll make a video about this as well later down the line. But yeah, it is also not a one-time thing like buying and holding whatever. You have to, this is a continuous process. You have to invest like continuously every month. A certain amount is ideal. So let me illustrate this to give you an idea. Let's say there is Tim and Boyle. Tim starts investing at 25 and he invests 1000 Dhaka every month for 10 years. So Boyle, on the other hand, starts investing at 35 and he invests 1500 Dhaka every month, and he does that for 20 years. So let's see at the returns. So when they both reach 55, Boyle has 1.1 million or 11 lakh Dhaka. Tim, on the other hand, he did not touch his investment, by the way, after he started, after like 10 years, he has 15. This is the power of compounding, but more importantly, the power of starting early. Even if it's like 500, 1000, 5000, 2000, whatever the number may be, you should start. Do start. Invest early, invest often. The time in the market always beats timing the market. All right, lastly, we have individual stocks and business equity. The remaining 25%. This includes my bets on individual companies that I think would do well in the stock market. And also it does include a few of my stakes on my friends' businesses. This is risky territory and I could lose money, but I'm hoping that I'm young. I'm hoping that I could absorb the risk. I could mitigate this to like over the time I can make it back up. So this not many people has the risk appetite for this, but I do. So this is why I am willing to allocate such a huge portion of my portfolio into this. I always put my money into blue chip stocks, so no penny stocks, nothing shady. Also, I only invest in blue chip stocks, so think like Google, Microsoft, Apple, right? Things like that. For illustrative purposes, let us look at a hypothetical. I bought my first graphics card in 2015. It was NVIDIA. So let's say instead of buying the graphics card, we invest in NVIDIA in instant, right? So the stock was trading for 80 cents. So that is $0.8. And if I bought the shares instead of the graphics card, it was $100 approximately the value of the graphics card. So let's say if instead of buying the graphics card, I put it into NVIDIA stock. It was in 2015. So I would have 125 stocks exactly. Today at 182 per share, the value of my portfolio, that $100 would be sitting at 22,000. I would have made 220 times it. But remember, for every NVIDIA, there are 10 companies that go to zero. So don't gamble with your money. Only do this like spiritually, I'd say. So how do you start from zero? I mentioned that I'll be sharing how to start from zero, but as this video is getting quite long, I'll give you like a very basic idea so that you can start working on it right now. Focus entirely on the 50% bucket. So that is the mutual funds or ETF. What will you need, right? 5 things. A valid NID, a bank account, a BO account, which is basically your brokerage account, and a nominee. You'll need a nominee, and this is optional, but an ETIN. After you have this, you can sign up to any mutual fund of your liking and simply buy their funds. A few options to choose from is Shanta, Edge, VIPD. None of this have sponsored me yet. This is my first video. Do your own research about this. I will make a video on how to invest in all of my buckets if this video reaches 100 likes. That is all for today. If you have any feedbacks or questions, do comment below. I read all of your comments and I promise to get back to as many comments as possible. Thank you so much for watching. I'm Saif Kabeer. See you again in the next video.